Welcome back. Recently, one of the digital information firms in the country, Stairs Business, released a report on the implications of COVID-19 on the country. The analyst referenced investment flows, trade in goods and services, as well as oil price as key areas expected to be hit. The chief economist of Stairs Business, Michael Famaruti, joins us now for some analysis of the report. Good morning, Michael. Well, let's begin by you talking to us about the uniqueness of your findings.
Morning. It's a pleasure to be here. I think the key thing from what we've done so far is essentially just try and provide a comprehensive view of how the pandemic and the shutdown would affect the economy. So far, we've seen pockets of work being done either by the government or private sector, and we considered it just important to collate and combine the work so that people can have a full view of how things might pan out in the next 18 months or so.
Oil price is one of the areas that the pandemic is expected to hit the country hard now, and that's evident already looking at the prices. But given the output cut of OPEC a few days ago, prices seem to have simmered. How much of a boost will that bring to the revenue base of the country?
Well, I guess the important number here to note is that in the last 10 years, oil earnings have accounted for roughly 60% of federal government revenues. So oil prices are key. The reality, though, is that if you look at the price trend over the last couple of days, even after the agreement between OPEC, Russia, and the US to cut supply by about 10 million barrels a day, prices are still trading between $20 and $30, which is still below what we expected coming into this year. When you also factor in the fact that Nigeria should be pumping about 250 barrels less than it's expected, I'm still not positive on oil earnings, and I would still expect them to come in maybe 40 to 60% less than at the start of the year.
A lot of employees and their employers, of course, are working remotely, especially in the services sector, and they can render cross-border services electronically and also get paid electronically. But is the impact of such services factored in your report?
Yeah, one of the key findings of our report actually is that across the world and in Nigeria, the services sector is harder hit by the pandemic and the shutdown. This makes sense, right? When you consider that sectors such as aviation, restaurants, and so on, they've essentially shut down in this period. What we've also seen looking at China in particular is that even when we open things up again, where factories start up very quickly, it takes a lot longer for the services sectors to get going. So the key lesson there is that if the government is looking for an area to provide particular support for, then services are a very good candidate, particularly when you factor in that about 80% of small businesses in this country operate in the services sector.
Well, we've already seen the knock-on effects of COVID-19 on the manufacturing PMI for the month of March. Of course, that slipped from 58.3 to 51.1. How bad can things get, bearing in mind that some of the subsectors are currently not so affected?
I think things can get very bad, right? If you look at PMI abroad for March, generally you look at the US, the Euro area, Australia, Japan, UK, for March across board, we saw record low PMI numbers. I expect by the time the CBN does the same for April, we're going to see numbers in the low 40s at the very best. In terms of forecast for this year, right, the World Bank and co are expecting the Nigerian economy to shrink by about 3.4%. That's twice as bad as the 2016 recession. So again, this shows the extent to which things can get very bad very quickly.
Now, in your report now, you amplified the forecast of the International Finance Institution that about $80 billion have been taken out of emerging markets like Nigeria within this period. But also, we've seen some bullish trends in the capital markets lately. So how would you balance both?
Yeah, I think for the Nigerian stock exchange, right, what has happened over the last 6 to 9 months is that the market has been beating down significantly. When you also consider that over the last 6 months or so, a lot of liquidity has coming from the fixed income side. A couple of days ago, the DMO conducted a PMA, and the 364-day bill sold at 4%. Right? So I think what we're seeing in the stock market is a bit of local investor buying, particularly because, look, the fixed income market isn't particularly good right now, and people are placing bets for the next 18 to 24 months in the equity space. That's my view.
Now, still talking about your views now, Michael, are you on the same page with Augusto and Co. that sees diaspora remittances also sinking by as much as 20% this year?
Yeah, I think one of the basic lessons of investment flows is that diaspora flows into Nigeria and other countries are relatively stable, even during recession. So we saw that in 2016. The difference today is that even the diaspora is going to struggle, right? The global economy will contract by about 2% this year. So I firmly agree that we can expect a drop in remittances and all other types of flows. I would not suggest 20%. I haven't done the math to try and figure that out, but it does not sound like an unreasonable number at all.
What about consumer demands now? They are actually drying up following the economic shutdown as businesses are unable to pay salaries. Of course, FARC disbursements are also expected to shrink to about 400 billion naira going forward. How can the federal government manage these risks?
Well, I think the key word here is stimulus, fiscal stimulus. People need money. State governments need money. You rightfully pointed out that FARC is going to go down by about 30 to 40% very soon. A lot of people are losing their jobs. A lot of businesses are going to shut down. And yes, the CBN has done great to extend a lot of credit to these people. But the reality is that the federal government has a lot more reach. And what people need right now are grants, not loans. The 20,000 naira stipend is a positive step, but really it's a very little drop in a very big ocean. And I think we need to do a bit more to help businesses and people during this period through direct fiscal support. There is no getting around that.
Your report also mentions that the pandemic, which has now led the country to a recession, will expose some structural defects. Now, this is true of our healthcare system, education, and infrastructure gaps that we have. But how can the palliatives put in place by the fiscal and monetary authorities change that?
Well, the reality we all need to accept is the nature of structural problems is that you can't fix them in a day. For example, whereas countries across the world are spending significant funds this period to support businesses, Nigeria does not have any fiscal room to do so, right? Because revenues are low and we already have too much debt in terms of how much we're paying back. So that structural issue of low tax revenue has come back to bite us, and there's no way we're going to fix that in the next 2 to 5 years. So the best thing we can do is find temporary fixes, such as going to the IMF and World Bank to borrow, which is what we have been seeing so far. And I think that's true for every sector, from healthcare to infrastructure to government finances and so on.
The IMF projects that Nigeria will contract by minus 3.4% this year. Is that also your view for the country at Stairs Business?
Well, again, I would not sort of latch onto the particular number, but it's definitely in the ballpark of what we would expect. if you also look at how the Chinese economy performed in the first quarter when they locked down Wuhan and so on, it's very, very morbid. And I'm expecting essentially the worst official economic performance since the 1980s when the military were in power. Something between -3 and -4% seems about right.
With all these factors now, Michael, do you foresee a further devaluation of the naira?
I think that's inevitable. I've been very happy that over the last month, the CBN has shown a willingness to not hold the currency too much. And I saw earlier today that the IMF especially had hinted that one of the things they would like to see when they lend us the money is a more flexible system. And I think the CBN does not have the dollar reserves to hold the currency at 318. And over the next 6 months, we can probably expect a further devaluation. And my best bet is somewhere between 400 and 450 naira to a dollar.
Chief Economist, Steers Business, Michael Famarutu, thanks for your time.
Thank you. Always a pleasure.
All right, so it's time to review Tuesday's trading activities at the Nigerian Stock Exchange, and Temple Achaju is standing by to give us those numbers. Good morning, Temple. So we saw an additional 344 billion naira added to the stock market's overall value yesterday. Tell us more about that.
Sure, obviously, even if we don't have enough in our external reserves, as Michael Famaruti said earlier, we have enough liquidity in the system, and that's why we've been seeing a lot of investors locally trying to, invest these funds in every available space. If you look at the 30-day average performance of the market, a lot of these stock prices have bottomed out in terms of losses. The FPIs have now, shrugged off. You asked the question to Michael earlier about some $80 billion worth of investment flows, which some folks predicted will be off the market. Nigeria has seen all of these, exited the market lately. So the prices that you have at this point gives room for a lot of the local players to continue to, invest these funds in the market. Data for what we've been seeing in the debts on the debt side of the market, the bonds, the T-bills, and of course the OMO end of things. But so specifically on the equity side of things, we're up yesterday by 302 basis points, and of course, as you hinted, we added some 343 billion naira to the market's capitalization, the equity capitalization of the market, specifically 11.746 billion naira is what we now settled at. And of course, all of these activities has now moderated the year-to-date losses, and of course, improved our month-to-date performance in the markets. So we're up by this margin yesterday. We got volume a little bit down yesterday. It was a decline of some 44% yesterday only. But if you look at the average, that 30-day average of the value of the transactions that we have, it was down actually by some 28%, but we remain around 3.33 billion naira, which is of course the 30-day average generally for the market in the system. So yesterday it was down by some 28%. But look at the value or the deals, the number of deals continue to increase. We were doing some 4,000, 3,000 plus before, but yesterday and of course the day before, we've been seeing all of these at 5,166. Generally, that was what we had yesterday. If you look at the volume of transaction, FBN Holdings was one of the major contributors, did some 75 million units of its shares yesterday, worth some 343 or 345 million naira yesterday in the markets. Folks have seen that this particular company is really low in price. They've also indicated plans to now buy over to sell down rather some 65% stake that they have in FBN Insurance to Sanlam, which is a major owner of 35% stake in that business. So all of that will bring back some liquidity into the FBN Holdings side of the market. Let's move on to the banking space, where we saw Zenith Bank doing some major contributions. So what we have here was up by 9% plus yesterday. We got Unity Bank was also also up by some 8%. A couple of other banks, GT Bank was up by some 7% yesterday, and that's how we arrived at this 446 basis points increase yesterday. For the consumer goods side of the market, we got some increase in Unilever. Champion Breweries was back up yesterday, was up some 10%. That was something that also contributed more to this level of performance that we saw on the side of the market again. Don't forget, there's still an opportunity to buy opportunity, as a lot of analysts have actually indicated, on Dangote Sugar, which is doing some kind of an M&A with Savannah Sugar. We don't know the details of that deal yet, but we've seen a whole lot of support around this particular company. It's been given some rise to this particular segment of the market lately. Industrial goods, thanks to Dangote Cement. 2 days ago, they concluded the book building for their 100 billion naira bond issue in the market. It was a minimum subscription of 10 million. Even retail investors were able to participate. I know that a lot of traders and dealers in the market, as well as treasurers, are currently waiting for the outcome of that deal. But then investors switched again to the equity side of things, started buying the shares, which had fallen to a low of 117 naira. That's a level that we haven't seen Dangote Cement in a long time. So folks started buying up, and it was up 10% only yesterday. The day before, it was also up. So all of that pushed up the 302 basis points rise that we saw on this side of the market, thanks to WAPCO as well, which also contributed more to the gains that we saw in this space. All of that, WAPCO and Dangote Cement were able to offset the losses that Kiotex had in that space yesterday. Insurance segment of the market, folks seem to be done with ICO insurance. ICO was down by more than 4% yesterday. And if you put all that to what we have here, this segment of the market was down by just 50 basis points yesterday, given the major loss that we saw in that space. Now the oil and gas sector, and of course, typically this takes us to the energy stocks. 112 basis points rise yesterday, thanks to your toast of that side of the market. Again, O&O, adding some 10 kobo yesterday or thereabouts. And so we saw it at 2.90 kobo, was up some 9.85%. And of course, if we look at very closely, we got 15 million units of its shares traded basically yesterday. If you look at other sides, there was no interest there because, again, the regulation is what a whole lot of them are waiting for. So moving on to the other side, Seplat, no change. Total, Etana PLC, Global Spectrum remain unchanged. And of course, your regular Capital Oil and RAC Unity remain intact. The unlisted security side of the market was unchanged. We got just one deal on that side of the market yesterday, and it was on Niger Delta Exploration Production Company. The PLC had the only deal, I think just one deal, one investor probably, and of course was the entire 2,120 units of shares valued at 572,000 naira. Yesterday, that was what we saw on that side of the market. It opened at 300 naira and closed at 300 naira. There was mainly no change. That side of the markets, investors yesterday made a comeback because, again, they had been distracted earlier by the Dangote Cement 100 billion naira issue. But that changed yesterday. They came back to the market and bought a lot at the short and the mid end of the curve. You look at the 17th of March, 2027, and specifically the 23rd of February, 2028, where you had more deals as well. Look at these. They bought more on this side. There was more demand on this side of the markets yesterday on of all these two key papers. If you look at the number of deals that they did yesterday, 32, compared to what we did in the preceding session. But again, in terms of bond now, the DMO has indicated that it is going to be borrowing some 60 billion naira in the market, going by its plans for its auction. T-bills, there wasn't so much, it was quiet. We've been seeing some cross dealings in that space. But for the OMO side of things, activities actually slowed yesterday a little. That's because some investors dotting their I's and crossing their T's, busy.
Thank you, Temple, for reading those numbers. Of course, we'll see what directions markets will take today, if the positive momentum will be sustained.
We do hope so.
And we'll do an opening call to London, as well as the debt and currencies markets when we return in just a moment.